1. Palantir stock boom, the shocking stat investors must know before buying. 2. Why Palantir's moat keeps growing, a deep dive into its financial success. 1. Palantir stock boom, the shocking stat investors must know before buying. Investors, brace yourselves, a shocking statistic about Palantir you can't ignore. Palantir Technologies, PLTR, has taken the investment world by storm, with its stock skyrocketing an astonishing 700% since the beginning of 2024. This remarkable surge has undoubtedly left those who invested in Palantir feeling quite pleased with their decision. However, while this figure is certainly eye-catching, it's not the most critical statistic that investors should be paying attention to. Understanding this key metric could be pivotal for both potential buyers and current shareholders, as it may significantly influence the overall investment thesis surrounding Palantir. Palantir's revenue growth, impressive yet incomplete. Palantir is a major player in the ongoing race to harness artificial intelligence, AI. Unlike many companies that have only recently begun to roll out AI products, Palantir has been at the forefront of this technology since the early 2000s, giving it a substantial advantage in the market. Initially, the company developed its software primarily for government applications, famously contributing to the operation that led to the capture of Osama bin Laden. Additionally, its technology played a crucial role in optimizing vaccine distribution during the COVID-19 pandemic. Recognizing the potential for commercial applications, Palantir's management pivoted to explore this avenue, and their instincts proved correct. While government contracts still dominate Palantir's revenue streams, the commercial sector is becoming increasingly significant. In the first quarter, the commercial division generated $397 million, reflecting a robust 33% year-over-year increase, compared to the government sector's $487 million, which saw a 45% rise. It may seem surprising that the more established government side outperformed the commercial side, but this discrepancy largely stems from underwhelming international performance in the commercial sector. Outside of the United States and China, the global adoption of AI has been relatively sluggish. For instance, Palantir's commercial revenue in the U.S. surged by 71%, reaching $255 million in the first quarter. This stark contrast highlights a significant gap in overall commercial growth, especially considering that U.S. revenue constitutes about 2/3 of total commercial earnings. If countries in Europe and elsewhere begin to embrace AI more fully, Palantir's growth trajectory could accelerate dramatically, potentially propelling its stock to new heights. But here's where it gets controversial: valuation concerns. Despite the impressive revenue growth, the key metric that investors should really focus on is Palantir's valuation, which appears to be alarmingly inflated. In the first quarter, the company reported a 39% increase in overall revenue year-over-year. Yet, the stock has surged by over 700% since the start of 2024, creating a significant disconnect between the stock price and the company's actual business performance. When a stock price becomes detached from the underlying business fundamentals, it raises red flags and could spell trouble for Palantir's future stock performance. Currently, Palantir's stock is trading at an astonishing 112 times its sales. For context, most software companies typically trade at a multiple ranging from 10 to 20 times sales, placing Palantir well outside this norm. While it's not unheard of for stocks to trade at over 100 times sales, those instances usually involve companies that are experiencing rapid revenue growth, often doubling or tripling their earnings year-over-year. Palantir, however, is not in that league. I challenge investors to identify any stock that has maintained a valuation exceeding 100 times sales, excluding those that went public with minimal revenue, that has proven to be a sound long-term investment. My search has yielded no examples. Palantir finds itself in a precarious position, and the path forward hinges on its ability to grow into a more sustainable valuation or face a painful correction in its stock price. To reach a more reasonable valuation of 20 times sales, Palantir would need to increase its revenue by over 550%. At its current growth rate of 39%, Achieving this target would take more than 5 years, assuming the stock price remains stagnant during that time. Such a scenario could lead to disappointing returns for investors. Therefore, it's crucial for investors to recognize the extreme valuation of Palantir's stock and consider their options. If you've enjoyed the ride with Palantir, it might be wise to sell some or all of your shares. For those contemplating an investment in Palantir, I would recommend exercising caution, as the hype surrounding the stock may be too inflated to yield solid long-term returns. What do you think? Is Palantir's stock worth the risk, or is it time to step back? Share your thoughts in the comments. 2. Why Palantir's moat keeps growing, a deep dive into its financial success. ###Why Palantir's competitive advantage continues to expand. In the ever-evolving landscape of technology and data analytics, Palantir Technologies has established itself as a formidable player. But what truly sets it apart? Let's delve into the reasons behind Palantir's growing competitive moat. ###Summary. Projected revenue growth. For the second quarter, Palantir is expected to report revenues of approximately $939.29 million, marking a significant year-over-year increase of 38.5%. This growth is accompanied by strong revisions in earnings per share, EPS, indicating a robust financial outlook. Client retention. The company boasts a net dollar retention rate exceeding 120%. This impressive figure highlights Palantir's ability to maintain strong relationships with its clients, allowing for organic revenue growth without incurring additional sales expenses. Operational efficiency. Palantir's operational leverage is noteworthy, with a year-over-year EPS growth of 53.74%. This efficiency supports a free cash flow margin that is anticipated to exceed 40%, showcasing the company's ability to convert revenue into cash effectively. Strategic contracts. Long-term agreements, such as the substantial $1.3 billion contract with the U.S. Army, solidify Palantir's position as a vital partner in government AI initiatives. These contracts not only provide financial stability but also enhance the company's reputation in the sector. Future projections. Analysts predict that Palantir's quarterly revenue will reach $1.37 billion by the fourth quarter of 2026, with EPS growth projected to approach 150% by the fiscal year 2028. This optimistic forecast underscores the company's potential for sustained growth. Investment thesis. In my previous analysis, I posited that Palantir, PLTR, defies traditional value metrics, having surged from a mere $7 per share by capitalizing on its unique position in the market rather than just its earnings. Despite delivering strong results in the first quarter, many investors overlook Palantir's critical role as a backbone for AI-driven decision-making, which justifies a significantly higher valuation. Analysts' disclosure. I hold a long position in Palantir shares, whether through direct stock ownership, options, or other financial instruments. This article reflects my personal views and was written independently. I do not receive any compensation for this article, aside from what I earn from Seeking Alpha. I have no business ties with any company mentioned herein. Seeking Alpha's disclosure. It is important to note that past performance does not guarantee future results. This article does not serve as a recommendation or advice regarding the suitability of any investment for individual investors. The opinions expressed may not represent those of Seeking Alpha as a whole. Seeking Alpha does not operate as a licensed securities dealer, broker, or investment advisor. Our analysts are independent authors, including both professional and individual investors, who may not hold licenses or certifications from any regulatory body. Recommended for you. This analysis raises some intriguing questions. How do you perceive Palantir's growth trajectory? Do you believe its unique position in the AI landscape justifies its valuation? Share your thoughts in the comments below.